Hi everyone. I'm Jocelyn. Thanks for coming. Jocelyn from MakerDAO. I'm the APAC community lead, managing business development and also community building, and mainly in Southeast Asia. So I think I see a lot of familiar faces here. Any projects here? How many projects? There are a few more actually. So today I will be talking about the key different key milestones before that we have to achieve before MCD launch actually, and its security roadmap and how new projects like you guys can actually add. Considering adding that token to be part of MCD. So before I start off with MCD, I'm just gonna give a brief recap about what is Maker Protocol. So Maker Protocol, which powers DAI, is actually a smart contract system that backs and stabilizes the value of DAI through a combination of different factors. The external market forces, the internal economic incentives, and also policy tools. So the Maker's flagship product is actually DAI, the stablecoin itself. So it's soft pegged to a US dollars, it's backed by collateral. For users to actually borrow DAI, a user can actually create a collateralized debt position called CDP and draw out loans in DAI. So, and if when the user is done with the DAI that he draws out, he can actually retrieve the collateral by paying down the debt and stability fee. So stability fee is essentially just interest, that you have to pay us, for maintaining the peg. And the entire system is actually over collateralized at least 150%. So meaning that if today you want to draw out like $150 worth of DAI, you need to collateralize at least $150 worth of Ethereum in the smart contract. And it is somewhat similar to getting a home mortgage from the bank. Traditionally, you go to the bank, they do a credit rating and check, and then what the bank does is that they will issue you a mortgage loan and locking up your property ownership rights. So similarly for us, instead of going to the bank, you actually come to DAI smart contract, collateralizing Ethereum, and generate loans against your own asset. For now, it's just Ethereum. So Sai, which is the alpha version of DAI, was actually launched in December 2016. And the beta version was launched in December 2017. The beta version was actually the first decentralized stablecoin built on Ethereum blockchain protocol. And as of today, we have about 79 million, when I last checked today, outstanding DAI in circulation in the market. And we are locking up about 1.43 million Ethereum in the in the smart contract. Which is about $255 million. At one point of time, it was about $500 million. So we are launching multi-collateral DAI very soon in the fourth quarter of this year. So keep a lookout. And DAI, in 2020, DAI, our plan is to actually peg DAI to more currencies. For example, DAI, Euro DAI, and Japanese Yen DAI. So the difference between single collateral DAI and also multi-collateral DAI is that single collateral DAI is actually backed by just Ethereum, and is less diversified because it's just one single asset, right? So multi-collateral DAI, it's backed by a lot more different diverse assets. So we are talking about different nature of asset types. It can be crypto assets or secure tokenized real world assets. And liquidations for single collateral DAI, the current version of DAI in the wild today, the liquidations actually occur at a fixed discount to the current collateral price. When we launch multi-collateral DAI, liquidations are actually handled using auctions. And for single collateral DAI, Maker is used to pay stability fee. And because we actually get a lot of users' feedback that says, why not DAI? So when we launch multi-collateral DAI will be used to pay off you can actually use DAI to pay off a stability fee. And for both versions of DAI, decentralized governance actually come into play. So if you're Maker token holders, you can have the voting rights to vote on the very important decisions of the system itself. We're talking about, collateralization, different risk parameters. For example, collateralization to debt ratio, debt ceiling, how much debt can you create, out of this asset type, and liquidation ratio, liquidation fees, that you have to pay when we liquidate your position. So ever since we launched DAI in late December 2017, DAI has actually grown in terms of activity and diversity, because we see a lot more Ethereum developers integrating DAI on top of Maker protocol. DAI in circulation today, like I said, is about $79 million. And if you look at DeFi pals, the total value locked in the entire DeFi ecosystem is 500 million. And for MakerDAO, we are leading the DeFi space by locking up about 255 million. And of course, there's a lot more up and coming, exciting DeFi applications that we will see. And obviously, when we launch multi-collateral DAI, we will see a lot more growth in terms of use cases and also use cases, yeah. So enter multi-collateral DAI. So security is actually the first priority for MakerDAO Foundation. So what we do is that, like in order to actually keep the system solvent, we have a very robust CDP liquidation mechanism by just ensuring that these core contracts are being audited and also verified. So if you are developers here, you can actually look at the regularly updated core MCD contracts on Coven testnet. And we have also published a few documentation of functions. So this documentation is supposed to actually provide information about the operations of different various systems in Maker protocol itself. For example, we just published documentation last week on how to run your own auction keeper bot. So what is keeper? I mean, it's a little bit deep here. Keeper is essentially just like a bot where a trading bot that participates in auctions when there is a liquidation of CDP. So this keeper will actually go out there to the secondary market and acquire collateral at a cheaper price. And obviously, smart contract security, audit check, it's also very important. Let me just go a little bit more detail into the security roadmap itself. So we have 4 different parallel tracks here. We have a bug bounty program with HackerOne, and this program actually goes on indefinitely. I mean, even after after we launch MCD, and we do a formal verification of the core smart contract. For example, the DAI token contract, auctions contract, DAI savings rate contract, which I'll be sharing with you later on, and emergency shutdown module and Oracle security module. So these are the different smart contracts that we did formal verification for. And we also engage independent third-party security audit. For example, runtime, they are like runtime verification, Trail of Bits, and PackShield. So all these information are very transparent. It's all available on our blog. And we have an integration partner program as well. So we are trying, I mean, we are actually working with a selected group of partners and integration partners to test out MCD in realistic environment, so that we can decrease the odds of vulnerabilities actually slipping through the cracks. So which I'll be sharing with you a few more use cases that a few more examples that we did with some partners. And the second key milestone would be to achieve consensus for governance and also risk. like I think most of you actually know that MakerDAO. It's a DAO, and a governance is very important in maintaining in keeping the system actually stable. So we have published a collateral onboarding guide and application form about a month ago. So these set of forms actually provide the collateral partners the information on how you can actually add or propose your asset, a new asset type into governance for review and also analysis. And governance poll was conducted to narrow down to the different asset types that the community wants to see them being evaluated. And I will show you in the next slide what are the different asset types that will be evaluated first. And we have also put up a risk framework document. This risk framework document is supposed to actually provide information, guides, and models, for external risk analysts, risk specialists to actually analyze the system itself. And if you're a Maker token holder, what you can do is that as a community member, you can actually evaluate the collateral types in different ways. For example, you can ratify or vote for like a collateral to be added to MCD in individually, or you can classify them into like different risk groups because different asset types have got different risk parameters as well. So this was what I was saying just now. Maker voters has signaled the preferred order of collateral types to be tested first, to be evaluated. So these are not these are not an MCD yet, okay? These are just the different asset types that are going to be evaluated. So we have Ethereum, we have Augur REP, we have Basic Attention Token, and we have 0x. So this slide actually gives a high-level overview of how our internal risk team actually vet a token proposed as a collateral. So if you're a project here and you want your token to be added to MCD, what you have to do is that you have to submit a collateral onboarding application. And our internal risk team actually takes on 3 different roles, which is number 1, a technical integration role, a technical role, and the risk function role, and a legal role. So you have to submit this application form alongside with 3 different types of requirements, which is token specs, tech audit, financial specs, and your financial requirements, and also your legal specs to the internal risk teams. And what the team will do is that it will combine all these different risk types into a total score, and determining the proposed risk parameters. And for example, I was saying that every different asset type has different risk parameters. Ethereum is actually way much more volatile, and if you go to DGX, DGX is backed by gold. Maybe it's not as volatile, and then maybe the collateralization to that ratio would be lower. In order for you to draw out, like maybe say 100 DAI, you have to collateralize only 120 DAI. So $120 worth of Ethereum. Yeah. So when the risk team actually came up with the proposed risk parameters, what happened next is that onboarding new collaterals actually goes through a 2-step voting process here. So we have the governance poll, followed by an executive voting. So governance poll essentially means that, like we go out there and poll like sentiments from the community and see how divided the community is on certain issues. For MCD, right, they can, we can poll about, the sentiments about, what risk parameters should be used for this certain asset type. And then we have executive voting, which is where we actually execute the actual changes in the system itself. So we poll first, and then we execute the actual changes. That's how the voting process actually works in MakerDAO. And of course, user experience is very important to onboard new users other than existing crypto users or CDP users. So we are in the midst of renaming some system-related terms. For example, collateralization to debt ratio. In the traditional finance world, it just means like loan to service ratio, right? And then stability fees it's like interest. Yeah, and we're redesigning the whole new multi-collateral MCD CDP portal, the governance platform, and make a website, social channels, and product portals. We are also designing the migration app. So this migration app is for CDP users to actually migrate your existing CDPs to the newer version of DAI, which is MCD. So I mean, I think the team is trying to do a one-click design thing. So this is not the first time, because I mean, remember I told you that we have the alpha version. So when we actually upgrade alpha version to beta version, we did the same thing too. And emergency shutdown. So I mean, this sounds scary, but see, emergency shutdown is the last resort to actually protect the system against any security breaches. But it can be activated or occur. It can happen also when the underlying smart contracts on Maker protocol needs an upgrade. So which is MCD, when we launch MCD. So it's not like we're gonna settle the system and then return you all your collateral. So what is gonna happen is that there will be a transition period. Maybe say 3 months, 6 months, or it's not going to be like 1-2 days, but a longer period for you to migrate your CDPs to the newer MCD portal, MCD. Yeah. So this is a high level picture of emergency shutdown process. So who initiated emergency shutdown? The Maker token holders are the ones actually initiating emergency shutdown. And what happened after emergency shutdown actually initiated? There will be a waiting period, and what happened is that the system will actually cancel out the debt and surplus auctions, and then freeze the prices, and then process all the CDPs such that extra collateral can be freed. And at this point of time, right, CDP owner, if you're a CDP owner locking up your Ethereum, you can actually withdraw your excess collateral from CDP immediately. And for DAI holders, you have to wait until the waiting period has elapsed. So DAI holder, you can actually swap DAI for collateral. And DAI savings rate is a new feature when we launch DAI. So at launch, we will have this new savings rate feature. So what is DAI savings rate? So think of it like a DAI savings account. If you're a DAI holder, you automatically actually earn interest when you're holding DAI. We're talking about, so we're talking about, locking up DAI to earn savings from day one. I mean, this is very important because it helps to regulate the demands for holding DAI. So the current version of DAI out there in the wild is a single collateral DAI, and there's only a single lever, which is the supply side lever stability fee. So and when we launch multi-collateral DAI, DAI savings rate is supposed to help control the demand as well. So we are trying to incentivize DAI holders right now to hold DAI because you get 2 to 3% or 4 to 5%. I don't know what is the rate because it is determined by the Maker token holders. Yeah. So like I said, DAI savings rate, it helps to strengthen the peg. It increases utility of DAI. And enables new business models. Why? Because if you're running an exchange or a wallet today, right, it's very difficult to actually monetize. So with DAI, being able to generate that interest from day one, if your exchange partner, you can pocket in maybe say 1% of that DAI savings rate when we launch. So it's like an additional revenue generating channel, for businesses. I mean, like exchanges and wallets. So this is very exciting. We are because we are really bringing real world assets into MCD. So how does this work is that we're partnering with a few integration partner. For example, Fluidity, they have a tokenized asset portfolio to allow real world assets to be pledged as collateral. So we're talking about tokenized bonds, securities, real estate. And this would very much cover the functionality introduced by Libra because Libra is all about, it's backed by different basket of currencies and also low risk securities. So we are we are doing this with fluidity, just to add a lot more diversity of asset types to MCD itself. So by introducing real assets to MCD through tokenized asset portfolios, we are pushing forward our mission to connect legacy financial systems to decentralized finance, with the goal of making capital markets open and accessible. Because in the traditional finance securities world, right, I mean, a lot of capitals are actually being lock up. So like when we launch multi-collateral DAI, and when illiquid assets or real assets like this being tokenized, being added to MCD, we are going to see a lot more capital flow in the traditional financial market. So, and another example would be with Teen Lake. So Teen Lake is actually a project done by Centrifuge. So Centrifuge is actually a traditional invoicing financing platform. So with Teen Lake, what we do with them is that we're enabling small, medium businesses to actually draw out loans against tokenized invoices. So what happened is that with Teen Lake, right, they actually integrate CDP, DAI credit system itself, to the existing invoicing platform, and then allowing small, medium businesses to draw out loans against the tokenized invoices in the smart contract. So, and they have so far facilitated a borrowing of about 182,000 DAI. And I actually took the quote from Teen Lake founder, so I thought that is actually quite, it makes the whole use case more And so in traditional finance, to borrow against real-world assets, you need the likes of Goldman Sachs, huge volumes, and the cost and overhead are massive to conduct such transactions. So, but with Teen Lake, they tokenize and finance mortgages in 30 minutes with fees of less than $1 at competitive rates, presenting an alternative to the status quo that is cheaper, faster, more transparent, and inclusive. So this is exciting in a way, because we are really bringing real world assets to the whole crypto finance game. So there's a lot more different updates about MCD. So you can check out makerdao.com website, and there's a roadmap section. There'll be migration guide, DSR updates, and proposal for the initial DSR values, and a lot more. I think we have come to an end. Any questions from the floor or CoinGecko?
Thank you very much, Jocelyn, for the presentation. So,
thank you everyone for staying.
So I've got many questions on my side, but I thought I'd let you guys ask questions if you have any.
Any questions? No?
Just raise your hand. We'll send a mic over. Seems like, Jocelyn, the crowd wants me to ask the hard questions to you. So I guess let's start with a simple one, like the stability fee, also known as the interest rate on Maker. How is the stability fee determined?
So stability fee is actually being determined by the Maker token holders. So we have the DAI as the stable coin, right? And we have Maker token as the governance token. So what happened early this year was that the community started adjusting the stability fees for quite a bit, because there was a market demand and supply imbalance. So there was an oversupply of DAI in the market, and we have to actually increase the stability fees to stop people from generating loan in DAI. And but I think about 2 weeks back, it started actually coming down. Yeah.
What's the current stability fee at this point?
It's about 14.5%. Yeah.
At one point, it was up to 19.5%. Yeah. Do you think that the rates are really high compared to what the banks are charging?
I see. The thing is like, I mean, I do have community members debating about taking secured loans or unsecured loans, because if you go to the bank, right, they charge you like 20%, but it's not even secured. I mean, sorry, it's not. I mean, you don't have to pledge your collateral with them. So, but with us, you have to pledge your collateral. But see, the thing is, we are talking about different sort of risks, right? And also, we have a lot more use cases, built around Maker System itself. Like for example, Compound. Everyone knows Compound. Today, if you're a DAI holder, you can stick DAI on Compound and earn at least like 10% interest on Compound. Yeah. So, yeah.
Anyone? Questions?
Thank you for the presentation. I have a question about the part you talk about using the real world asset
Yep.
as a collateral.
Yes.
I still couldn't understand clearly how different you are comparing to the traditional finance company. I guess that to use the asset as a collateral, you would need to evaluate the asset. So what is strong about the bank is that they have a big team, people with the knowledge about the asset to evaluate the asset so that you can use them as a collateral. So in your case, how do you make it faster, easier, and cheaper?
So that's a good question, because see, I mean, MakerDAO, we are built on Ethereum blockchain. So essentially, it's built on blockchain. Blockchain, gives that transparency and also low cost of transaction and speed. Yeah. So I mean, the benefit is that because we are allowing tokenized real-world assets like invoices. I mean, today, right, if you are a company, and then if you want to, get a loan from a company, you have to do all these credit rating assessment, which a lot of small, medium companies do not have, a strong credit rating, and therefore they cannot get loans from the banks. So, but when you come to like smart contract like us or like MakerDAO protocol, what we can help you is that obviously you're right, we have an internal risk team that actually risk assess all these different risk asset types before we issue loans. But one thing good about us is that you don't have to submit your credit rating. You don't have to submit all your documents. But what you need to do is that we're giving you that authority to actually generate loans against the asset type that you own, which is the outstanding capital being trapped in the invoices. Because today, if you're a small company and you're dealing with a big company, say a big company that has got a payment term of like say 60 or 90, say 90 days or 180 days. I've seen that before. By the time when you receive your payment, you'll be out of business actually. But this is instant. So and you go to CDP portal or like the loan portal itself, collateralizing that tokenized invoices. We don't do the tokenization, but we work with companies that does the tokenization and collateralize that tokenized invoices and generate loans. Yeah, for yourself or your company. Yeah.
Any final question?
So what are the other, aside from invoices, what are the other types of assets, real world assets that are in the roadmap to potentially be tokenized? And I guess the other question would be like when you're crossing over from digital assets into real world assets, if say I default on, if I take out a loan against my house in DAI and I default on that loan, like how does that asset like get, is there like a repossession? How I guess what happens to the asset that's collateralized a real world asset that's collateralized if I'm defaulting on a
on the loan, right? So basically, you default on your mortgage payment loan, and then you come to us and with that tokenized, like security token, and you want to collateralize that security tokens. I don't know if I actually get your question right.
Well, so that token represents my house.
Yes.
Right. I'm
that's
taking
right.
out. So if I default on the loan, what happens to what happens to that asset being collateralized or that? Not the security
See,
token, but the
it's,
real world, my actual house.
Yeah, I know. See, the thing is like, security token is actually creating these fragments of ownerships, right? And basically, yes, able to sell that fragments of house, on blockchain to everyone in the secondary market. And I know that regulations for security tokens varies across different continents and different countries. So I did mention about adding securities token to MCD, but for now I think I mean we still want to be cautious. So we will start with digital assets first, and then we'll leave it securities token. I mean when the laws and rules are actually being in place, then we'll talk about maybe allowing tokenized mortgage portfolios. And I guess to answer your question, so if that if you default on the loan, default payment for your house, right? So what is going to happen is that we don't deal with that because we are just an infrastructure layer, right? Building a lending protocol. So our partner like Tinlake will deal with that.
So they would be like the repossessors to come seize my house.
I guess I can't really answer your question right now, but I can actually check and get back to you. So yeah.
Okay, no, thank you for taking a shot at it.
No problem.
All right, that's all the time that we have for today. So thank you very much, Jocelyn Chang. Let's give a round of applause for our presentation on Maker.
Thank you everyone for coming.